settle dollars through the SWIFT system. Venezuela's got the same problem. Russia's got the same problem. Well, pretty soon you're up to, we're talking China, Russia, Iran, Venezuela. Pretty soon you're up to maybe, a third of the world's population? I mean, how can you maintain a rightful claim to be the operator of the world's reserve currency when you've told a third of the world they can't transact in your currency? That's the amazing thing about decentralized cryptos. It takes the banks right out of the equation. And that's the power of decentralized money. You can be your own bank. And this is what has scared the central banking class more than anything, because their lifespan has now been clearly defined. And it has, because the world's come to the realization that we don't need banks. Cryptocurrencies and software give us a viable alternative to tyranny.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. Call me directly at 419-819-9209 or my sons and fellow brokers at 310-562-6400 or 419-490-5295 or email us kaiser@milesfranklin.com. Welcome back to Liberty and Finance. This is a returning guest you're sure to recognize. Rob Kirby of KirbyAnalytics.com, Proprietary analyst, joins us again this Monday, May 10th, 2021. Rob, thanks for coming back on.
Pleasure to be with you again, Dunnigan.
We wanted to get you back because, for one thing, our viewers always say when you're going to have Rob back on, so we can't neglect that, but also because the last time you were with us, you were helping to unravel a mystery that a lot of people are very interested in, and that is the rise of cryptocurrencies as what volume of dollar transactions or dollar alternative transactions they are carrying these days. And we've had lots of theories floated about the surging price of the currencies themselves, cryptos, as well as the transaction volume. One of the theories that's been floated is that the officialdom is wanting us to become acclimated to digital currencies so that we can accept the new Fed coin or whatever it's going to be with less fuss. But others are seeing it strictly as a all-out anti-dollar move on the part of those who are actually needing to make transactions. And you talked about the potential for major international transactions, perhaps including petroleum transactions being done in cryptos the last time we had you on. So could you bring us up to date on your latest analysis of that trend and why it's important and why people need to be paying attention now?
Yeah, the reason it's important, Dunnigan, is because the dollar is being, let's just say, lessened in terms of its importance in global trade settlement. I've made the claim now for quite some time that cryptocurrencies are being used to settle international trade accounts. Specifically, I referenced China, Venezuela, China, Iran energy deals. And those are being settled in cryptocurrency. And I've made the statement now, and I've been on this tact for many months now. And people have started to say to me, Rob, how do you know that cryptocurrencies are being used to settle international trade accounts? So I want to just direct people to the website coinmarketcap.com, and you can just type in BTC for Bitcoin and look at the latest volume for 24 hours in trade in Bitcoin. Well, in the latest 24-hour period, $60 billion worth of Bitcoin is traded. And in the latest 24 hours, if you type in ETH, which is the symbol for Ethereum, you'll see that Ethereum has traded $55 billion in the latest 24 hours. So let's add the two together. That brings you to 115 billion just with the two biggest coins, Ethereum and Bitcoin. And if you take that to a monthly run rate, you're at 3.5 trillion in trade for those two coins in the latest month. You see, and I didn't cherry pick the dates, okay? There have been days in the last week when Bitcoin trading has been higher than 60, and there have been days when Ethereum trade has been higher than 55. So,
clarifying question. We're talking about transaction volume in actual financial transactions using those media, not in the buying and selling of the coins themselves through people just buying from an investment standpoint?
Yeah, that's measurable. That's measurable transaction volume in Ethereum and Bitcoin expressed in dollars.
Okay.
So a 3.5 trillion a month run rate on those two coins leads to an annual run rate of 42 trillion. Okay, global GDP is not 80 trillion. So we have the two biggest cryptocurrencies that have 42 trillion in yearly, if you annualize it, in an annual turnover. And you tell me how 42 trillion versus a global GDP of under 80 trillion, how a big chunk of that is not global trade settlement. You see, 42 trillion, even in today's watered down currency terms, buys a lot of love. And it accounts for an awful lot of call it buying power. I mean, heck, U.S. military, I don't think they even spend $1 trillion a year yet. But maybe they do, because we don't really know, because so much of the budget is black. But let's just say 42 trillion still constitutes an awful big slug of cash. I mean, Canada has a GDP, I think, of around 2.5 trillion right now, and maybe not even that, with all the lockdowns and how our GDP has suffered due to the COVID lockdowns. But anyway, anybody who believes that there isn't global trade settlement occurring when these things are trading 42 trillion bucks worth a year, I've got some oceanfront property I can sell you in Montana. So that's just the cold, harsh breakdown, and it's not a difficult exercise really to contemplate or to wrap your head around. There is absolutely global trade settlement occurring, probably much more than what I've expressed or mentioned. But there's absolutely global trade settlement occurring in cryptocurrencies. Plain and simple.
Related question from Trixie McKay says, will Bitcoin go to zero if Venezuela and Iran start selling oil for something other than in Bitcoin, gold, or a crypto with greater utility value, for example?
My answer to that is absolutely no, because it's much bigger. It's much bigger now at this point than Iran and Venezuela and China. Russia's obviously, at least in my mind, Russia's clearly and obviously in the mix. And I look at the way that people like Janet Yellen and Jay Powell are acting in irrational means, in a very irrational manner. Janet Yellen looks to me like her knickers are in a knot. She's stumbling over her words. She's obviously petrified that cryptocurrencies are eating off the dollar's plate. And that's clearly what's going on. $42 trillion of transactions in a year in cryptocurrencies is the cryptocurrencies eating off the dollar's plate and nudging the dollar out of international trade. Anyway, all I can tell you is I expect this trend to hasten, to hasten and grow, not to diminish, because more people in the world basically are fed up with American sanctions, are fed up with America telling who what they can buy and when and what currency they can buy it with, And this is a trend that has been, look, this flower is just starting to bloom. We're looking at a bud. This bud will bloom into something much bigger than it is now. And the direction is clearly, look, it was really, really well exemplified to me. There was an article published over the weekend where the Bank of England head, his last name is Bailey, and he came out with this ridiculous statement. He said, anybody who invests in cryptocurrencies should expect to, or be happy or not be upset if they lose it all. So, and then in the same breath, Mr. Bailey said, but the Bank of England is looking into doing its own digital currency. So let me tell you this. Bitcoin, Ethereum are decentralized cryptocurrencies. Central banks have a wet dream that they can create their own cryptocurrencies, digital, and they want to work on a different model. They want to work on a model where it's centralized. And I will just say this. What gives Bitcoin, Ethereum, and a host of other cryptocurrencies attractiveness is the fact that they are decentralized and there's limits to how many there can be. If the central banks launch their own digital currencies, it will be centralized and there will be no limits on how many of them there can be, and hence no one will buy them. So, and if they try to force that on humanity, what will occur is it will amount to a do-over for the central bankers who through their recklessness, they've destroyed the fiat currency regime. And if they're allowed to, or if they insist on pushing digital currencies, I think they will fail at a spectacularly faster rate than fiat money ever did, because it'll be the Wild West. And all I can say is centralized, central bank controlled cryptocurrencies are an absolute recipe for disaster, and they won't gain traction, and people will choose. As long as people have choice, people will choose the decentralized currencies over a centralized currency, because it's the very fact that they are decentralized and they enlist blockchain protocols. And the blockchain protocols work very well with decentralization, because what they do is they stand as proof that the people, the creators, aren't overprinting or oversupplying the market. And with a central bank in control of such a thing on a centralized platform, it basically turns the round peg into a square peg, and it no longer fits in the round hole. So if the central bankers want to turn the round peg into a square peg, it's going to take a pretty big hammer to put it back into the round hole. And right now, the decentralized currencies are they fit well with the round peg and the round hole. It's not going to work. Okay. And we know, how do we know that? It's like I say, the volume speaks for itself. $42 trillion and growing of transactions in the two biggest cryptocurrencies is not an accident, and there's no other way to explain it. And frankly, anybody who can't see that necessarily means that they're being used for international trade settlement, I'm sorry, you're ignorant, and you need to go and take some economics courses. Economics 101 is a good place to start. Understand the measures of GDP, understand the significance of 42 trillion to a global GDP number of under 80 trillion, and that's really all you need to know. And there really isn't much more to say about it than that. It's just ridiculous to suggest or say otherwise. it actually shows a very low level of intellect and understanding and brain power if you can't see that. So I hate to say it that bluntly, but that's the way it is.
You've talked about the free market adoption of today's decentralized cryptos being driven by several desirable aspects of them, not the least of which is the lack of debasement and dilution that was under the control of the central banks under fiat, the lack of the ability to impose sanctions, which I guess is a special, sanctions we've think of at a sovereign level against this country or that country, but people are also concerned about that at a personal, individual level, about being deplatformed or basically turned on and turned off as an individual. If you don't get to transact anymore.
You're here.
And so I hear you saying that in general, if the central banks come out with a centralized cryptocurrency and say, look, here's the officially adopted one, this is the only one that's legal or whatever, that it's not going to get free market adoption because it doesn't provide those benefits.
You see, Dunnigan, if I buy a central bank cryptocurrency, the central bank can turn my account off whenever they want. The same way the United States tells countries like Iran that they can't settle dollars through the SWIFT system. Venezuela's got the same problem. Russia's got the same problem. Well, pretty soon you're up to, we're talking China, Russia, Iran, Venezuela. Pretty soon you're up to maybe, a third of the world's population? I mean, how can you maintain a rightful claim to be the operator of the world's reserve currency when you've told a third of the world they can't transact in your currency? I mean, there was a time when that worked, and there was a time when that could inflict massive pain on countries. But, the old cliche that necessity is the mother of all invention, that cliche has been around for a long time for a big reason. And, America has as much to do with their own currency's undoing as anybody in the world. I mean, when you possess the world's reserve currency and you disallow large swaths of humanity from transacting in that currency, all you're doing is making a great case for reasons why your currency should find alternatives. And that's exactly what's going on right now. It's happening right under our noses. And cryptocurrency transaction volumes continue to escalate every week. So, and they're growing at a phenomenal pace. And this is continuing. So, you can get with the program, accept what's going on, or not. So, but do so at your own peril.
At your earlier metaphor, you talked about the hammer that would be big enough to smash that square central bank digital currency into the round hole that people need to have filled, which is this thing that isn't debasable, isn't subject to people being deplatformed. But that's what people are really worried about. They're worried about that big hammer because they've seen what's happened in the past 12 months.
Realistically, Dunnigan, that big hammer is in our nuclear bombs. So if the globalists want to take us to a nuclear war, I can assure you there will be no winners, and everything we're talking about is moot. And if that's the case, maybe we should just go and, engage in prayer instead of, analysis of anything. Because God help humanity if that's where they're taking us. And I'm not saying it isn't where they're taking us, but I hope and pray that that isn't.
On a more detailed point that does still affect everyone who's currently subject to fiat currencies, Dominic Martino asks, if we're buying physical metals as a hedge against fiat currency collapse, such as the Australian dollar, is it possible to protect against Australian US dollar exchange rates eroding around the value of metals in the Australian dollar without opening a forex trade as a currency hedge? And he imagines Bitcoin may have a similar dilemma. So as long as we're still in this world of fiat currencies, how does holding either physical metals or cryptos affect people as the various international currencies devalue relative to each other?
Cryptos and precious metals are anti-dollar trades. I have for years maintained that the anti-dollar trades will do well, and the fiat money values won't hold up. The Australian dollar is a derivative of the US dollar, as the Canadian dollar is a derivative of the US dollar. The Canadian dollar is only expressed on international markets as a fraction, either less than par or greater than par of the dollar. So when you're measuring your currency against something that's going to zero, your currency is going to zero too. So that's just the way that works. And precious metals have a 5,000. You see, there's no fiat currency that has existed for more than 300 years. The dollar, you can say, the dollar of today is not the dollar of 100 years ago at all, because the dollar of 100 years ago was backed by gold. So, and it was freely exchangeable for gold. So it was basically a proxy of gold. And fiat money today is a proxy of nothing. So other than each other. But intrinsically, fiat dollars are worth nothing. They're worth zero. And they will ultimately achieve their true intrinsic value, which is zero. It just takes time. On the other hand, precious metals have been around for at least 5,000 years. Some would argue longer. And they've never gone to zero. And they're never going to go to zero. And cryptocurrencies have never gone to zero. Well, some will, because some of them are frauds. Okay, so we were talking about fiat money functionally against anti-dollar trades, being the cryptos and precious metals. And precious metals have never gone to zero. There will be some cryptocurrencies that will go to zero because I mean, to launch a cryptocurrency today, all one really needs to do is, I guess, put out a shingle and say you're going to issue a whack of coins, and the market immediately rewards you with a dizzying amount of market cap, because there is a manic nature to what's going on in the cryptocurrencies, but it's going on for good reason. It's going on precisely for the reason that was cited earlier, because cryptocurrencies are eating off the plate of the dollar in world trade. It's created a bit of a gold rush mentality into them. And the appreciation of many of the cryptocurrencies has been at an astonishing pace in recent months, with many reports of cryptocurrencies, individual coins or tokens, going up hundreds of % in weeks or days. And this will continue, and there will be losers. There will be losers in that aspect of the game too, but something with a daily turnover of 60 billion, and another one with a turnover of 55 billion average per day isn't going away in a hurry. So, but many will. Many of the more let's just say fringe players, and the potential of massive money always attracts unsavory people. Just like the dollar has, been the darling of organized crime for many years. I find it hilarious when central bankers refer to cryptocurrencies as being the realm of criminals. I mean, the preferred currency of criminals for the last 100 years has been the U.S. dollar. I mean, it's preposterous to state that suddenly anybody who engages in trade in crypto is a it's just a non-starter. It doesn't work.
I know I've used this story before, but it's a true one, and it seems very relevant here for people talking about this environment we're in, where any new crypto can get launched, but only the leaders are necessarily. It's hard to call which ones are going to be the survivors, but there's certainly some that show that they're carrying a lot more of the workload. when you visit the Henry Ford Museum in Dearborn, Michigan, there's a display of many, many, many automotive vehicles throughout the ages from the very dawn of the automotive era and onward. And there's this big display board, like an inclined table, very wide, and it has written all the names of all these car companies, and most of them, the vast majority of the ones that are written on that board, are in faint gray ink, and only a few of them are in bold white ink still. And you study it and you go, what is this? And then the legend explains that the ones that are in white ink are the ones that are still in operation today, and all the rest of them went out of business. So there was this rush, this gold rush of, everybody could open up a car company back in the first decade of the 1900s, but only those few survived to this day.
Yeah. Well, let's done again. That's a great comparison. There will be many cryptos that will be the equivalent of Edsels. You don't see many Edsels driving down the streets of America anymore. But the amazing thing is there was a time when they were the rage, but they've fallen by the wayside, and the vast majority of cryptocurrencies very likely will end up in the Edsel category. But the ones that survive and thrive, in my view anyway, are probably here to stay or to be with us for a very extended period of time. So that's the way I see it, and I'm sticking to my story.
We also have a strong interest among the questions that have been submitted by viewers about the state of the physical metals exchanges, although I hesitate to call them physical metals exchanges because, again, the volume is dwarfed by paper exchanges of futures on those. But, for example, on the COMEX and the LBMA, Urban Sombrero says, Rob, do you think there's a significant pressure on authorized participants to avoid exchange for physical with penalties, such as suspension, to, quote, protect the integrity of the market? There's been reported, quite a bit of pressure and stress on the ability of the major exchanges to deliver physical in recent months, and yet the demand remains high. What's your insight into any pressure that may or may not exist on participants to dissuade them from standing for delivery?
I don't want to mince words on this at all. The LBMA, the London Bullion Market Association, and the COMEX are the two primary price discovery mechanisms we have for precious metals. And they, in my view, are both colossal frauds. And they don't reflect the scarcity of physical precious metal whatsoever. And physical precious metal is an extremely short supply. And converting promises of metal, which is what the chief business of the COMEX and the LBMA, they are not places to go if one is interested in procuring sizable amounts of physical precious metal, because that's not the business they're in. The businesses that they're in is paper promises of metal, which they never want to fulfill in physical form. They want to trade dollars. They've dollarized the metals, or they've tried to dollarize the metals, because if you buy a silver future, and if the silver future goes up, they're counting on you taking more fiat dollars in return. And they're never, ever counting on you saying, okay, I've done well with my metal. Now I'd like to take delivery of the metal because I'm going to put it in a hole, or I'm going to hide it, or I'm going to put it in a vault. That's not the business that they're in, because they don't have the metal in physical form to cover the number of promises that they've sold. So, that is a gross disparity that's been going on for ever and ever and ever on COMEX and LBMA. They're in the business of selling promises that they never intend to keep. And as long as they keep most of the population tricked, I've used the comparison in the past. I love it when people say, well, when is this going to end? I don't know, probably done again. It'll be round about the same time when people stop going to see people like David Copperfield and Doug Henning, who make jets disappear behind curtains. Because jets don't disappear behind curtains. But jets do crash, and so do frauds. And LBMA and COMEX are frauds. So they will crash as sure as jets can crash when they run out of fuel. And the fuel for the COMEX and the LBMA are suckers who believe that they're buying metal when they purchase their contracts. But they're not. So how long do people want to be entertained and lose their money? Answer the question, and you've got the answer to how long this fraud can continue.
Well, there's certainly been a movement over the past 2 months, I mean, you could argue 4 months since the end of January, of people standing for delivery. I guess it started a long time before that if you go back to the sovereign level and the large hedge funds and that sort of thing all last year, and you could say central banks since before Basel III and all that. But at the retail level this year, there's been a rush for those pulling physical off various, both major exchanges as well as from dealerships and so on. We have a question from Elevator Mechanic who says, Rob, do you agree, first a two-part question, do you agree with Alistair McLeod that the dollar will be finished by the end of the year, number one? Number two, if a person had food, security, and shelter, what would be the remaining number one asset you would recommend for obtaining for a currency change?
I'm very familiar with Alistair McLeod, and I'm quite simpatico with his way of thinking. I mean, we don't know for sure when people like I said, the dollar falls into the same sort of category as the fake metals markets that I spoke of, because how long do people want to continue believing? Understand, all the central bankers and the treasurer of the United States, these people are panicking because the dollar is losing its share of global trade settlement. Plain and simple, that is occurring right under our noses as we speak. When do people finally say no more dollars? I think everybody comes to that conclusion or decision in their own time. So Alistair thinks it could wind up by the end of the year, and I'd say he might be right, but he might be wrong. It could be by Labor Day, or it might be by next Easter. But let's just say the horizon of the dollar's usefulness is in sight. It's like looking at something very, very far out on the horizon, or it might not be as far out as you think. It might seem like it's a long way away, but we could reach that horizon point very, very quickly. And let's just say with a current 42 trillion annualized run rate on cryptocurrencies, I would say, that watching those volumes, those daily turnover volumes on those two big cryptocurrencies, if you see that accelerate, as I mentioned, just using the latest numbers, the overnight rates or the 24-hour trading volumes currently, call it 60 billion for Bitcoin, 50 billion or 55 billion for. If we see those numbers increase to say in a month or 2 months, if we see Bitcoin trading 80 billion a month, and if we see maybe Ethereum trading 75 billion a month, that would represent a very, very dramatic increase from where we are today. And that would tell me that basically you're chopping off every time that volume of those currencies, cryptos, ramps up, you're snipping off days, weeks, or months of dollar viability. So it's difficult to answer, but it's kind of sort of, in a sense, it's measurable because you can watch the alternatives grow in importance. And if they are growing dramatically in importance and in trade volume, it necessarily means the dollar's position at the table is being diminished. So could it happen by Labor Day? Maybe. Could it be the end of the year? Maybe. If we flatten out here and the volumes don't change for 6 months, and the reasons for that could be numerous, maybe it buys another 3 months. But all I'm saying, the people who are in charge of fiat money are fighting a rearguard action. They're not winning, they're losing. So basically, the question is, how long can they hold out? When someone's under siege, how long can they hold out? Some people in a siege last longer than others. Some people can fall very, very quick. Ask the people in Rome, how long they thought they could hold out. And I mean, the reason Rome fell for the most part was because of currency debasement, coin clipping. See, it's amazing how history, if it doesn't exactly repeat, it rhymes.
Something you just said reminded me totally of something that Rick Rule said a couple of last interviews about the GameStop, Wall Street Silver, Wall Street Bets phenomenon of the what they call the rise of the retail investor. And that was that these retail investors basically created or discovered a new fundamental in his view, which is looking at assets that have completely imbalanced short position versus float available. And you're talking about, very interesting, because people always ask us, they say, what are the signs? What are the signs we're going to see? What are the signals before? Give us something to watch that's going to happen before the big convulsive collapse. And this is very interesting what you're saying about watching the leading crypto transaction volumes can be an early indicator if it suddenly runs away.
There's no doubt in my mind. I mean, Dunnigan, if we were to speak in 3 months and if instead of being on an annualized run rate for the two top cryptocurrencies, if we're up to, say, a $68 trillion run rate, annualized, I would say the dollar has slipped a few more pegs, and we're getting closer to the edge of something absolutely hard to wrap your head around, the collapse of the dollar. So exactly how long it can go on, it's, how long do people want to believe? Dunnigan, when you think about it, there's a huge segment of the population. There's a huge segment of the population. Many, many gold and silver people that I've known for many years have never even considered for a moment owning a cryptocurrency yet. Okay? So let's just say there's a lot of room for a lot more people to adopt crypto. Okay? And I don't think the real driving force behind crypto adoption is converted gold bugs. It's international trade. Because America has cut people off from settling international trade accounts in dollars, people are looking for alternatives, and they're saying, bugger this, we're not going to adopt anything that the Federal Reserve or America has anything to do with. They'll cut us off again. So, this will grow. This is very small right now. And, cryptocurrencies and global trade settlement in cryptocurrencies will continue to steal food off the dollar's plate. And I'm saying that because metaphorically, if you go back 50 years ago, there was no euro, and the dollar basically accounted for almost 100% of global trade. And, now we have the euro, now a considerable amount. And listen, if one thinks back to the timing of when Saddam Hussein was deposed, nobody from Iraq flew planes allegedly into the World Trade Center. It wasn't Iraq who attacked the Pentagon, but Saddam Hussein did change the currency in which he sells his country's oil to the world, because he switched from selling his oil for dollars to selling his oil for euros. And shortly thereafter, he was deposed and his country was invaded. And then Iraqi oil went back to settling in dollars again for a time being. I don't believe the Iraqis are currently selling their oil for dollars. I think they're selling it for euros or Chinese currency. But you see, this is what happens. This is what happens when you bully people. And bullying people and telling people that they can't engage in commerce. It's not a good way to keep people being a fan or a user of your currency. You know what I mean? That's happened in spades. So we've moved along because the central bankers act in leagues together, and the countries that were cut off from settling in dollars were also cut off from settling. Basically, we're cut off from settling in euros too, because the global central banking class is a big club. And if the Americans are cutting you off, you're going to have problems trading in euros as well, because you're going to have trouble settling. But you see, that's the amazing thing about decentralized cryptos. It takes the banks right out of the equation. And that's the power of decentralized money. You can be your own bank. And this is what has scared the central banking class more than anything, because their lifespan has now been clearly defined. And it has, because the world's come to the realization that we don't need banks. Cryptocurrencies and software give us a viable alternative to tyranny. And this is what's being rolled out around the world right now. And it's growing. We're in early days here.
Anticipating this convulsion in our currency, many are looking towards how secure their country's future is based on their lack of or possession of gold reserves. We have Martin Jekov who asks, Rob always says that Canada does not have any gold in its possession, which is true, but isn't the Royal Canadian Mint Corporation the one which holds this gold and effectively is having it for Canada?
No, the Royal Canadian Mint does not possess adequate working stock to even run their Maple program. They need to procure from outside government sources. So no, we sold our gold. Canada used to have sovereign gold. We used to have 660 metric tons, but we were convinced to sell our gold back in the 80s when Ronald Reagan hatched a plan to crash the price of gold and basically cut the legs off from the Soviet Union. So, you see, the Soviet Union fell because, to begin with, they got themselves into an arms race with America, and that's what Star Wars was all about. People, you got to be of a certain age to even remember the term, but Reagan basically engaged the former Soviet Union in an arms race that the Soviet Union couldn't win, because the Soviet Union couldn't feed itself. Okay, with all this brilliance that that communism offers to humanity, this false illusion that everyone's equal and there's plenty for everyone. What communism does do is it removes incentive, because this axiom that everyone is equal and everyone makes the same basically led to conditions in the Soviet Union where farms weren't productive. Okay, and when farmers that didn't produce anything got paid the same amount as farmers who produced in abundance, and people got sick of seeing people who did nothing get paid the same as people who put in big effort and accomplished a lot. Well, what that does is it kills incentive. Okay, so people lose their incentive to be productive, and that's the hallmark of communism: people losing their incentive to be productive. So they couldn't feed themselves, so they had to have limited trade with the West. And the West would only buy two things from the Soviet Union. In practical terms, they would buy their crude oil or they would buy their gold. Those were the two things that Russia had that the West would purchase. for hard currency. And then the Russians would in turn take that hard currency and buy the food that they couldn't produce because they disincentivized everybody. And so much of the Soviet Union economy was agrarian based. But there was no productive capacity in the system that they had built because there was no incentive, you see. And so they needed hard currency. And the way that they got hard currency to buy food was to sell gold and oil. And it was the 1980s that both, if you're of an age of me, gold went to 800 and then it collapsed back to 250. Oil went from 3 or 4 up to 40, and then it collapsed back to 6 or 7. And you see the collapse of gold from 800 down to 250, and the collapse of crude oil from 40 down to 6 or 7, that took away the Soviet Union's allowance. I mean, they got cut out of dollars. They didn't have enough dollars to engage in trade to buy the food they needed. So that's what bankrupted them. But you see, part of the plan back then in collapsing the gold price included Canada dishoarding its sovereign stash. And I would suggest to you that the reason that Canada was required to divest itself of our sovereign stash, we were talked into it. And I truly believe that the reason for that occurring is because the gold that America claims to possess, I don't believe it's there. I think it was already squandered. Or for the most part, already squandered. So, and I've done a lot of research in that area, and I believe that to be true. So, there's never been a credible audit done of West Point. There's never been a credible audit done of Fort Knox, unless you want to count the Trump Treasury Secretary Mnuchin. He went and had lunch at Fort Knox one day. Literally, he was there for, I don't know, he might have been there for a half hour, 45 minutes. And after being there, he came out and said, gold is good. Well, I agree. Gold is good. But if you don't have any, it's not so good. Never talked about whether there was any there. He just said gold is good. And I agree. Rolls Royces are good, but I don't have one in my garage. And Lear jets are good, but I don't have one in my hangar. Dunnigan, what I can tell you, nobody in a position of power in Canada or in a position of responsibility, no prime minister. I questioned a former prime minister of Canada directly, who was actually engaged in. He was a former minister of finance and a former prime minister, Jean Chrétien. I questioned him directly at a private dinner that I attended back in 2006, I believe was the year. And I asked him about the dishoarding of Canada's gold. And I'm telling you, Dunnigan, before I had asked him the question, I think he had fielded 2 or 3 questions prior to mine. And when I asked him and brought up the subject of gold, he turned as white as a sheet. He mumbled and stumbled. And then he said, that was so long ago, I can't remember that. Really? You can't remember selling 600 metric tons of gold? I wonder if he remembers the first car he ever owned. Let me tell you, selling 600 metric tons of gold is a bigger event, I would argue.
This is sobering. You mentioned before communism removes incentives. People are seeing that now globally through this whole COVID lockdown system, people not wanting to go back to work, people being told they're going to get universal basic income. That's a whole new era we've got to dig into in a future interview. Yeah. We are running out of time in this one. We want to make sure people know how to get a hold of you and follow your analysis that you do.
You can catch me on the web at kirbyanalytics.com and at fine outlets like Dunnigan's.
Yes, folks, if you want to make sure you don't miss us and any future interviews with Rob, any of the links to articles that he may discuss, any of the links to all of our other interviews with all of our guests, make sure you go to libertyandfinance.com, our homepage, libertyandfinance.com, put your name and email address in the left-hand margin, sign up for our all-free newsletter. You won't miss a single episode. Rob, as always, on behalf of all of our viewers, thank you for joining us here on Liberty and Finance.
It's been my pleasure. Keep your chin up.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. Call me directly at 419-819-9209 or my sons and fellow brokers at 310-562-6400 or 419-490-5295 or email us, Kaiser@milesfranklin.com.